Hello everyone and welcome to the NinjaTrader webinar room. Before I begin, I would like to do a quick test of picture and sound, so please type in an A for audio and V for visuals if you can hear my voice and see the slideshow projection on the screen. All right, it looks like I am coming in loud and clear. Thank you everybody for confirming that for me. We have a very special event for you today. We have Rob Graham of EminiSniper ready to give you a wonderful presentation. NinjaTrader is pleased to sponsor weekly partner events as a value-added service for our clients. These events are intended to provide increased exposure to the various trading styles and methods taught by our partners. So if you find value in these events, we hope you will attend them on a regular basis. Also, one more item to briefly mention for those of you who are interested. NinjaTrader has added more free online training events throughout the week, including weekend events as well also, so you can also log in on the weekends and get the same great training that we have during the week. We actually have an ATM or Advanced Trade Management Level 1 webinar right after this presentation, so feel free to stick around for that webinar if you'd like to learn more about Advanced Trade Management and what it can do for your trading. And here's a link into the room here so that you can go ahead and view all of those training events as well. Now I'd like to go ahead and ask a quick poll in the room. So I'm going to go ahead and get that added in here, and this is just asking if you are currently using NinjaTrader. So go ahead and press the green 1 if you are a live license user, press the red 2 if you are a free license user, and press the orange 3 if you are not yet using NinjaTrader. Now, while you are filling that out, I would like to mention, if you have any comments or you would like to share with us about the presentation or even questions to learn more about the NinjaTrader software or EminiSniper and NinjaTrader, please feel free to send a note to sales@ninjatrader.com and we'll be happy to answer any questions that you may have. Now, it looks like most of you did get a chance to fill out that poll, so let's go ahead and go over those results. So it looks like in the lead here we have our live license users with 61% of you in the room. Welcome here today to this presentation. Always great to have you here. In second here we have our free license users with 23% of you in the room. Excellent to have you here as well. And last but certainly not least, we have our those who are not yet using NinjaTrader with 14% of you in the room. Great to have you as well. Now, if you are one of those in attendance who has not yet used NinjaTrader, I'd invite you to download NinjaTrader absolutely free and get started with simulation trading, advanced charting, market analytics, and strategy development. This free version of NinjaTrader that you can download from the following link has no expiration date, so you can use it for as long as you like. So go ahead and get started with that, certainly. The only thing that you can't do within the free version of NinjaTrader is trade live to your brokerage account. The only time we ask that you purchase or lease NinjaTrader is if and when you are ready to start trading live. The best value would be to purchase a lifetime license for a one-time payment of $9.95, which allows you to receive all future upgrades and releases, as well as support from our excellent support team for life. There's also a 4-monthly payment option for that lifetime license as well, and you can learn more about that at that link that I just pasted into the room for you. Now, if you're not quite ready to purchase a lifetime license, please take a look at our leasing options. We have many leasing options available where you can try trading live with NinjaTrader on a shorter term basis. And here's a link for those as well if you'd like to take a look. Now, it's also important to remember that NinjaTrader is not a broker or a data feed provider, so you will need to connect to one of our over 100 supported brokerages or data feed providers worldwide. If you are looking for a data feed provider, I would recommend looking at Kinetic, NinjaTrader 7's preferred data feed. Kinetic provides free end-of-day data for stocks, futures, forex, ETFs, and indices, and is pre-configured within every NinjaTrader 7 installation. Kinetic also provides fast, unfiltered tick data, and these streaming quote services start as low as $50 a month, and you can even have your CME exchange fees waived with a qualified brokerage account. So please visit this Kinetic website to learn more about what they can offer you. Now, I did mention that there is a pre-configured end-of-day connection for Kinetic within every installation of NinjaTrader. So that means if you are one of those who are not yet using NinjaTrader and you downloaded from that link that I pasted into the room, you can get started viewing daily, weekly, monthly, yearly charts absolutely free within NinjaTrader just by connecting up to that. Well, we're very excited for this unique event with Rob Graham, and his topic for today will be powerful E-mini sniper trading strategies. So please join Rob as he addresses specific uses for each indicator, such as how to adapt them to your trading style. Thank you again for your attendance today, and without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Rob Graham of EminiSniper.
Thank you, John. I appreciate it. How's audio? Is it coming through?
Coming in just fine.
All right, that sounds great. All right, well, I really appreciate NinjaTrader for hosting this event. Really appreciate that. It's a very nice thing that they do for people that aren't exposed to these different systems, and really appreciate that, John, for hosting, and everybody for coming out, because I know tomorrow's a big holiday for a lot of you. So you know, appreciate you showing up, and I know a lot of people have shopping to do and that kind of thing. So, all right, we'll get started. I see a lot of current members, old members, and new faces. So, thanks for that. All right. Start out with the disclaimer. We all know that there's a risk involved in trading, and of course, past performance is not indicative of future results. So we all just want to be aware of that. You know, only trade with money that you're comfortable with. As far as the EminiSniper trading room, its hours are 8 a.m. to 11:30 a.m. Eastern Standard Time, and of course, you know, holidays. We won't be open this Friday. I want to say, if anybody does decide to sign up, I will push your membership back to Monday so that you get about 35 days out of the first month with the room. The website is EminiSniper.com. Feel free to check it out. Contact me through that. We do have free trials monthly, and if anybody can't make the trial dates, let me know. I can give you the password for the day. You're welcome to come into the room and check things out. My email is info@EminiSniper.com, and if you want to Skype me, I'm EminiSniper1. I've traded stocks and options quite a while ago. Then when I started getting involved in futures, I started with ES. I found it a little slow for my taste. So I've been trading CL, EMD, Russell, and DAX primarily, some Euro. And I've been running the room for a couple of years now. That's a picture of me, my wife, and daughter. The trade room is $199 for the first month. I am letting everybody have 10% off who wants to sign up. And then after that, it's $99 a month. When you get your trade room membership going, you are going to have access to the 3 EminiSniper indicators. That's the EminiSniper, EminiDiver, and EminiTargeter. We're going to be looking at those, how we use them individually and in combination, and that's very powerful. All right, we are looking to simplify our trading. You know, trading is difficult to do, but sometimes the market gives you some fairly good indication of what's going to happen, and the indicators are pretty powerful at pointing that out. We are looking for tight stops. I'll show you where those stops are for each of our entries. As far as targets on our trade, we have a couple of different ways to manage our trades. We can use our targeter indicator to let us know how far these trades might run. You can use a static target, certainly, if that's your preference. And then we also have trail dots that are customizable for whatever your trading style, or you know, how much room you allow your trades to breathe. And then as far as the indicators, I happen to use a 3-range chart, and I double check my trades on a 6-range chart. Now, some people do use Renko charts. That's their preference. We'll take a look at that and see how the signals look on that kind of chart. Our EminiSniper indicator, that's going to offer with trend only signals. EminiDiver can be set up to show with trend and counter trend signals. And then Targeter, you can use that in combination with either of the other indicators, or there's you know, certain members that just use it all by itself. It's a very powerful method. In the trade room, we're going to be watching CL, DAX, Euro, Dollar Index, EMD, and the Russell. We do look at the 3-range primarily, and then I'll drag over a 6-range chart just so that we can put where we are in perspective. Sometimes the 3-range chart will be fairly choppy, but the 6-range will tell us exactly what's going on. And then as far as news goes, sometimes we will get a very attractive trade setting up just prior to a news release. It is best to let that play out. The news reaction may not be what you expect, and you may get whipsawed. And then if there's no trend, my preference is not to trade. I know that some people like trend reversals off of a sideways channel, and Diver is very good at spotting those trades, but it's not my preference. I think that there's easier trades to be done. We'll go over the indicator package. EminiSniper, that is primarily what I trade. As far as looking at the signal, we're going to have our trigger line. That's going to be this white dash line that we see. Our stop is going to be the tip of this arrow, so that's going to be 2 ticks beyond the swing high. And then you can see our trail dots will allow us to take advantage of this trade. We'll see charts in just a minute that's got targeter on it that can allow you to trade and pick your targets that way as well. Here we have another short. This is our entry line where we see this text. This is our entry. So that's going to reflect the same level as our dashed white line. And then we have another trade here. This is a with trend only signal. It can't be adjusted. Certain things can be adjusted. You can have it identify less trades, you know, or whatever your preference is on that. As far as our diver indicator, these trades are all with trend for us. When we say with trend, we mean we're going to be looking for longs above our moving average and shorts below it, and our moving average will be green in color if we're looking for longs. So this just happens to be with trend. We'll be seeing with trend and counter trend to see kind of the advantages and disadvantages of both. And then this is our targeter indicator. This is going to be in our lower panel. What we're looking for is we're going to be shown a signal. What we want to see is our green line crossing this dotted magenta line. That's going to cross, kind of doing this X formation. And then it's going to hook down and follow as the trade progresses. And when they cross again, that's a very good exit point. Sometimes our trail dots will allow us to stay in a trade longer, but when these cross again, I would like to be out of the trade because that usually means we're going to get a retrace there, and I don't care to fight that for my trading. So here we have an entry, and what the targeter is identifying as the exit. This would be a little short entry here, and we can see that we're hooking right here, so essentially a flat trade in here. This is also pretty far away from our lower bands. We like the entries relatively close to our band. We can't always get a touch of our band, but the market is usually going to retrace a little bit closer, and those are going to be our preferred entries. Hello, Kenu. All right, so now we have our next short. Here's our entry, here's our exit. So that's both identified. We have our cross down, and when they cross again, that's a nice exit point. Same story, cross, exit, cross, exit. So that's it's very powerful in itself, and if you're just looking at the lower panel, you can see that it's identifying the trades just as well as the sniper is, but using both in combination, it's very nice. Now, as far as our entry price that's identified on our white dotted line and shown next to the arrow, that is an entry that I'm going to take because it's confirming a 1, 2, 3 reversal pattern on our retraces, and I want that to lock in. So say, for example, we might initially show the arrow here, price retraces more, and then this arrow is going to move up to this candle, and that reversal pattern hasn't locked in and wouldn't touch where our entry price is. So then we keep retracing, and this will adjust, and then when the reversal pattern locks in, that's not going to move again. Now when you get a diver signal, let's look at a long here. We'll come up with that diver signal in a second. So this is longs. Longs are often choppier trades. And sorry, I'll get to all your comments in just a second. Longs can be choppier, and so smaller targets are nice. You know, the last 3 days we've had some really excellent downside pushes, and you know, for me, that is definitely my preference, is to take the shorts. All right, so we're seeing the longs. We see where they cross again. That's an exit. Now, as far as our confirmation goes, that's this little triangle here. And we get that generated when our green line crosses this kind of plum-colored midline. And then as far as our next long goes, we don't get that because our targeter is in the wrong scenario. The green is below the dotted magenta, and we're looking for it to be above. So we pass on this signal. Then we get this signal here. Now this is going to show us upside divergence, and I'm assuming pretty much everybody's comfortable on divergences. This means that we have a lower low in price and a higher bottom on this this green. So this is going to show us upside divergence, and we're going to see a nice long scenario that plays out. All right, let me see. I got to answer a couple of these questions. All right, so I've been asking a lot while I've been chatting. What markets? Okay, they work on all markets. Isn't it just stocks? It's not. There's a lot of things that the indicator will look at, and stocks is part of it, but there's a lot more involved in it. Sorry for being late. Would like to know what time frame the chart is. We're looking at a 3-range chart, Trader T. Are these ADX parabolic MACD indicators, or are they custom? Everything's customized. I've got actually 2 programmers that work for me. One that's developed all the diver, targeter, and sniper signals. And thanks, Call, for the 3 and the 6. Yes, and they're range charts. And you can increase the range to your preference. Yes, Joy, will definitely be looking at a 6-range chart and what we use it for. All right, so I think that's all the questions for the moment. All right, so the chart on the left is a 3-range. The chart on the right is a 6-range. Now, we can see how choppy that we are initially on our 3. And you see we start actually showing some longs. The longs wouldn't be of interest to us because we are looking for our green to be above our dotted magenta. So we would pass on this signal. And we have no confirmation here. So the longs, you know, we would be kept out of this, even though our moving average is green, but it's basically just a flat box. So this is a no trend, no trade area. We don't really care about it. Maybe on this we would say, okay, we expect a pretty strong reaction on our moving average. And, you know, this is probably a 10 to 12 tick trade. This one's probably, you know, 3 or 4. But again, our targeter is not showing us what we want to see on this trade, so we wouldn't be a bit interested in this. Now, this is our 6-range. Our 6-range is showing us everything that we want to see. It's showing us a double top, short side divergence, cross, trail dots kicking in. If you were using the exit for targeter, that's probably right in this area, but still a substantial trade. This is about 70 ticks. Targeter on that cross would give you about 40. So, you know, I don't know what everybody's daily target is, but that would certainly be ample for what I look for. All right, I'll catch up with the questions. All right. Okay. All right, so Paul's asking average risk to reward. Paul, a lot of times I will, for every one of these trades, the stop is generally 6 to 8. What we're looking at, these are Heikin-Ashi candles, so they can vary in length. It's a 3-range chart. If you use a straight 3-range chart, it would be 3 ticks per candle. So essentially, you could have a 6-tick stop every time on a 3-range. But if you move to Heikin-Ashis, it will extend the length of these candles somewhat. You can have some 3-range 3-tick candles, but you may have some that are longer in length, like even 6 ticks, what have you. So our average stop is about 6 to 8 on what you're supposed to use. And as far as risk to reward, It's very strong if you use the trail dots. What I usually recommend on the trail dots is if you're trading 2 contracts or more, take off half of your position at 4, 5, 6, what have you, whatever your favorite is. They basically all hit, many times a day, and then use your trail dots to manage your trade and really get some substantial moves. If you're trading our signals off of a 6 range, we have one of the members in here actually that is he goes for 10 every time using Targeter and with trend trades. Our members have very good high probability trades. They adapt the style to what they like. So some only trade off our moving average. Some only, there's just different scenarios. I'll point out a lot of that kind of thing in just a minute. Yes, you can increase the range to your preference, Joy. We definitely have people using 6 and 8 range charts. We have people using 8, 6, and 4 Renko charts. So there's definitely a lot of flexibility. And we have people using these signals to trade all kinds of things, not just futures. All of these entries and exits automatic. It's not automated, Joy. For CL, use the 3-range chart. Yes, I do. Can this be used with a 610 chart? Trader T, it can. I have had some people ask, as far as chart types go, I've had people ask for like 2,800 minute charts, and it's not enough candles to produce anything of interest. I loaded it up and it shows like 3 candles. I'm not going to be able to generate any signals out of that. So we do want to at least have some candles print. I know some of the markets don't move very much, so some people trade bonds, and on my 3-range chart, it's it's like only 4 or 5 signals a day, and that's great. DAX is going to be 500 signals a day. CL is going to be hundreds of signals a day. So what we want to do is look for the best signals. That's why I'll kind of tell you guys as far as the trades that we want to take, and just let the other ones pass. Take your recognizable trades. Don't trade through chop. There's going to be plenty of opportunity. All right. With 199, do we own the indicators? Jen, it's a lease on the indicators. It goes down to 99 bucks a month. You get the trade room every day. You get access to the forum, and you get all 3 indicators. Profit factor or back testing results. Thanks. I don't have it. I would like to have it thrown into a strategy and give you a firm number on it, but I do not have that available just because the programmer, there's too many things that the signal looks at, and the programmer couldn't, has not been able to put it into a functioning strategy that replicates what the signals identify, if that makes sense. And hello, Wooter. Thank you, Wooter. And Keiko, yes, it can be used on Renko. And what makes the arrows print? Is it an algorithm? It's just what the programmer has put together. It's looking at different price levels. Like I said, it is looking at a reversal pattern to show us these entries, and I use the sniper signal, the entry price, and Targeter to show us everything that we want on these trades. All right. So I love the questions, by the way. Keep them coming. If you think of any more, let me know. Okay. So here's a box. Now we can see I don't have the Targeter panel shown, but these trades are substantial trades for sure. They're 2 of these could have you hit your daily target. I don't ask anybody to trade the 1,000 signals we see a day. It's clearly not worth it. I don't drink enough Red Bull to be able to keep up with all of the signals, but just a couple can definitely have you hit targets. My personal target is about 20 ticks a day. That's what I'm looking for. I find I can hit 20 ticks a day, and if If I am taking silly trades, I can lose it, and then I can get 20 right back again. Today was a good day. You know, it was very easy trading. I was closer to 40 ticks, but we have members that are looking for 70 to 150 ticks a day, and for that kind of thing, they are looking at larger time frame charts and some of these other things that that we'll get into in just a minute to look for some bigger, not as scalp kind of trades. All right, so this is a 4 Renko chart. This is what the signal looks like. Renko, it's a little bit sharper in its movement. If you're familiar with this kind of chart type, it's kind of these very strong peak and valley looking things. It's not exactly my favorite as far as looking at our targeter in the lower panel. It's kind of sharp and hooky, and I'm kind of used to seeing that more smoothed out thing like we get on our range charts. But it does work. It's going to generate a lot of signals. This signal right here, this is a little bit far away from our bands for my taste, but certainly still profitable. And this is whatever it is, maybe 8-10 minutes on a CL chart, and this is what you're going to be used to seeing is a lot of signals that are going to work out. And so definitely, if the charts are flat and not going anywhere, just give it a few minutes to play out, because we will usually get a strong reaction if you just if you're just a little bit patient. Okay, so here we have a CL chart, and we're looking at what basically we expect the market to respect our moving averages. And when it doesn't, if it gets into a big push like this, a lot of people like the fibs, the Fibonacci numbers, if you're familiar with them. And you may sit at the 50, you may sit at the 61, 8, whatever your preference is or whatever you've learned, all of that kind of thing. Now, if you're sitting here, you're not going to be able to be involved in this trade. If you're sitting at the 61, it's not even going to get close to you. To me, I think a very valuable application of the sniper is to identify the market's fib levels that it's going to retrace to. Now, I was a fib trader, or at least I attempted to for a while, and I would get some good trades out of it. But for one, I don't necessarily trust that 3 fibs, or at least these bigger time frame fibs, are going to hit all in a row. It's almost rare that 2 of them work out. But you may have better luck with it. But I was basically in a position where I was saying, well, if I sit at the 50, it retraces to the 38. If I go to the 38, it retraces to the 61%. So I would either miss a trade or get run over as it retraced deeper than where I had my stop. So that was definitely part of the thought process going into it. So we can see this initial trade here retraces to about the 38. So you give up a few ticks, but at least you know where the market's going to go to. And a lot of people look for this minus 23% extension. It does eventually hit. This is obviously a big trade. About about 80 ticks or 60 ticks from this level. Now, if you had drawn a fib on this and you were sitting at the halfway back point, you'd probably get run over, because this is more like a 90% retrace on this move. So if that is something that you like to employ in your trading, is the fib levels, then I think you would find it very valuable. We've got one of the members that looks at these levels on an 8-range chart and really hits some gigantic trades daily. And I think that there's 100 of you in here, and I'm sure that scalping doesn't interest some of you. You're looking for those bigger trades, and if you kind of train your eyes, sniper is very valuable for that. All right, so here we have a diver chart. This is the one that can be set up to show you with trend and counter trend trades. So here, we start out with this cross up on this reversal. This is not really my favorite place to take a reversal. I like to be further away from the bands and then have the diver signal identify a retrace back to our lower band in this case. So we'll see that in just a sec. But this is some of that back and forth movement that some people like to trade in a channel. And Targeter is very valuable as far as showing these. It's going to show you when that move is over. Now you have a diver signal short. If you like that kind of trade, then that can show you a nice push. We get back to our moving average. Now we have a long signal, and that is this cross here comes up and then shows you when to get out of this trade. Now we take out this swing low and we start picking up some steam to the downside. It's very important not to try to fight a trend as it develops, let it dry out, and then take advantage of diver signals that show themselves. The first couple are probably not going to be worth trying because you're going to have some breakout traders that are going to be sitting at these levels and trying to drive price. Now, I think that breakout trading is not for me. I have tried it with another system, and it was, not something that was at all effective for me. So, you would sit at this point up here, you get 2 ticks into it, and then you get a nice 25, 30 tick pushback in your face. And then, you might say, okay, well, they're going to break this line. Well, now you get 3 ticks, and now it's, 150 tick retrace. So anyhow, now we get to this this point down here. We can see, some of the people that just take the targeter signals as the signals are going to trade without even running sniper or diver. These can show you some really nice profitable signals. Now here we get a double bottom. It shows us very nice divergence. We get our diver signal, and where's price going to go to? It's going to go right to our lower band. It may break right through, but you at least need to eyeball that as a potential place to exit, and that is what happens. Now we get nice divergence on this push-up. Divers identifying the trade for us, and then that's this next cross. We can see where targeter crosses again. We try not to fight that. It even has divergence up there, so where's price going to go to? It's going to go to our lower band again. Now we have our downside divergent trade here. We have another targeter cross. And our next push down, then what happens? We have our targeter cross back up. We get right to our lower band. We get our targeter cross back down. Same story. So that is definitely a way to use diver. And if you can do 2 of these, even you can hit a nice target on the day. You can actually get into some scenarios where you can take the counter trend up, the short, the counter trend back up, and really, it can definitely simplify your trading. Okay, this is what we call a double signal. So in the room, we're going to see it in a minute. We're going to be showing 8 charts, and we have 2 CL charts and 2 Euro charts side by side in the room every day. And the chart on the right, that's going to be showing diver. So this is identifying a couple of short side trades that the diver signal identified. We have our targeter crosses. I like to get the crosses above the midline, but you can't always get what you want. As far as a signal like this, they're both identifying a signal at the same point. And you can see that they don't have the same entry price because the signals don't have the same criteria that they look at. But these combination of signals together, they do have a lot going for them. They have some downside divergence. They have a sniper signal, a diver signal, a targeter cross on both charts. It's very, very high probability on that kind of an entry. As far as the learning process goes, if you were interested in the room, the first thing you want to do is get comfortable with the method. You get manuals for the indicators sent out to you. You're going to have access to the trade room every day. We definitely want to start out trading in sim until you're comfortable with how everything works, and ask all the questions that you like. Stage 2, learn what works for your style. So we have every different type of trader. We have some that can take advantage of the UK market open, which can be a very easy time to trade if you're that lucky. That 3 a.m. to 4 or whenever the big move starts taking place, it's we'll look at some of that. It can be some very nice trading. You may like a static exit. You may like the divergent plays only. That's actually on this list as far as taking the easy divergent plays. They line up for you. I'll actually get into those early if we get a signal. If it's not a divergence play, I only get in at the level identified by the text that prints on our screen next to the arrow. The markets, we look at them in unison. Today was kind of interesting on CL because it was going up after the crude oil inventories because it was about 6 million barrels less than expected. So that's going to drive price up. But everybody else started selling off. So CL, we don't try to guess which way the market's going to go. We just identify the trades, and if it wants to go, short for 5 signals and long for 15 or whatever, the indicator points that out for us. Always watching the larger time frame charts. Especially if we have just a completely sideways CL chart, for example. We look at the 6 range and it can show us exactly what's going on. Same thing with DAX, same thing with any of them. So a kind of odd retrace that we were in short side territory and now we've retraced rather deeply, and the signal starts looking for longs. If you look at your 6 range chart, it can show you that it is strictly just a moving average test on your 6. And then get comfortable with achieving a daily target. Find out what works for you. We have the traders that go for the big numbers, but they're also comfortable being 40 ticks in profit and having their trade come back and knock them out at break even. And that's not exactly my favorite way to trade. I more like to get in and out, and that's why I don't trade ES or Euro can be kind of slow after the U.S. market open, probably 3 days out of the week. It'll trend nicely about 4 to 5 days out of the week after the UK market open, and then we can get a kind of sluggish market out of it. And then as far as stage 3 goes, making use of the trailing dots or E-mini targeter on the exits on a larger time frame. All of those moves where we saw the in and the out on our little 3 range chart, those are 10, 20, 30 ticks. They can definitely be more like 30 to 70 ticks on our 6 range chart. And also watching those Fibonacci retracement levels like we were talking about on the larger time frame chart. Those, if you stick it out to a double top or even a minus 23% extension, those are big trades. And if you hit 2 of those a week, that can be extremely profitable for you. So well, let's look at some charts. Got about 20 minutes left. Please hit me up with any questions. I'll scroll down. I haven't let me see. Sorry, did you say it was automated? Any plans for the future? Joy, I'm working desperately on that. Does this work on Forex? Lance, I don't have access to Forex, but so if you do, great. Everything that we have is set up to work with the NinjaTrader platform. So the markets I look at, it keeps me plenty busy. So I haven't really tried to branch out, but every time we have a free trial in the room, while I'm answering these questions, I'll go ahead and switch over to our other. Okay, so we'll talk about these in just a second. Looks like there's a little ghosting. Are you getting the leftover slideshow in the background? All right, let me see. Joy's asking, how do you overcome chop zones? Joy, I will definitely, I will look at a chart in 1 second. you know, because we kind of have little snippets on our 3-range charts. I will look at those, and if we're sitting flat, our trends, just so everybody's on the same page, it's going to be higher highs and higher lows to the long side, shorts, lower lows, lower highs. If that's not happening, then, you know, we just let that resolve itself. You know, these markets that we trade really don't stall for that long. We always expect a good move out of the Russell, out of EMD. Those I trade in combination where one will offer up a better signal than the rest. We'll kind of scroll on that. Scroll through some of that. Okay, okay, Russell. Let's look at Russell today. Okay, so pretty sloppy initially in the morning. Here's where our room opened at 8. So this would be a case where we have swing highs and swing lows. We're not taking them out. We get here's our market open. Still nothing big to get excited about. If these bottoms we were talking about in the room, if those two bottoms had showed us upside divergence, we would have said, okay, we're going to spring to the upside. They did not. They didn't show us anything close to that. So you just sit it out. It's really not a big deal. We're looking at swing highs. We're not taking those out. We have a nice retrace here, pop up. We basically got to exactly the same point. No clues in that. So now we have a bottom in through here, and we start taking it out to the short side. Our first signal after our cross down below our moving average is usually one that we like. This is a non-confirm here because, you know, our green is not getting, you know, below the dotted magenta like we've been talking about. So here's our signal here, and here's our cross. Now, where they get out, this is where the targeter shows us to get out. Sorry. And that's going to line up right in this area through here. That brings us to our next signal. Next signal is kind of nice. It's showing us downside divergence. So we have a double top, but you know, a lower high in that second peak. It's showing us a target across. This is one of the ones where I like to be patient a lot of times, and I do look for divergences all the time. I find that they're real easy plays. And so then we have same scenario where targeter shows us to get out is basically right where, well, we run into our next signal. So now we have another targeter and another signal, and it tells us to get out here, basically milking these moves for, you know, as much as we want to see. This signal here, we don't have our cross. We don't have anything that we're looking for. We do get it here, pops down, goes about 6 ticks. Now this next signal, obviously we get the target across, same story here, and then we start breaking down. Now, you know, this is a funky week. This, unfortunately, we didn't get a signal on. I would have I like this area. This is a funky week. You know, it's got some smaller volume. Today is the you know, biggest travel day of the year and all that kind of thing. So I'm sure a lot of people aren't trading. I've talked to a lot of people that aren't trading at all this week. So you know, it's going to have some effect on the markets, and you know, we just have to trade accordingly. Let's see. So okay, here's my scroll bar. I was looking for that. Okay, so this is just a couple of days. All right, so I guess we'll just talk about this. All right, this is CL. This is 8 o'clock, I guess yesterday. I draw on the charts all the time in the room. I don't know if this is left over from that, but this is, you know, this is a very good signal for us. This is where we expect our reaction. Everything is picked out for us as far as, you know, we have our nice cross. We have everything that we look for. And when they cross again, you know, that's a nice exit period. Does happen to run us into our next signal. So we get our next signal here. 61 entry goes down to about, you know, goes 10 ticks. Now we're failing to take out this swing low, so we do have some consolidation in here. You know, some of these moves are hitting some pretty substantial targets, and then this, you just have to expect that price is going to consolidate, and then you're going to get the big move. If you miss the big move, it's to be expected. You just have to, let the market do it, and then go ahead and grab your retraces as your signal points them out for you. Now, here, same story. Didn't get a signal here. Normally we would have, 9 times out of 10 you do. All we are given is excellent divergence, our target or cross, and then our cross again down here, basically around this candle. Now we're not taking out the swing low, and we've already done this test. When we fail to take out the swing low, you really have to consider that you're going to get a trend change. Now, it is important to refer to your 6 range on these deeper retraces. This is 9 o'clock. This is right at our pit open. Now, the pit open, that's a lot of orders getting dumped on the market all at one time, and so it's going to be very hard to predict exactly what's going to happen. Sometimes, just like news, you'll get a really good-looking trade, divergence. It's exactly what you're expecting on the retrace and all that kind of thing, and it's not going to work out, and that's because there is that whipsaw effect that can be associated with that. So we get driven down. We get into this kind of choppier longs. The longs, a lot of times you're not going to get anything close. They're usually going to be about the half the move of your shorts. So choppy longs, whatever. Now we get to our market open. Same story here. The market attempts to push down strongly, and it bounces right back up. Now, I don't have a 6 range up to identify if this was a touch of of an upper band on the 6 range, but we did keep seeing that scenario where things would show us a false move right at a market open, right at news, whatever. So we have our longs playing out, and they're doing fine. This kind of long, this far away from our band, I'm not interested in it, because what we're always going to be expecting is to bounce back up. So when we're further away, I am expecting the price is going to want to return to it. So I don't, this isn't my move. This is my move. I'd rather take a short to go back to our band than I would to take a long that's far away from it. So now we have some consolidation. We start getting some of this push up. This signal, we're not getting a confirmation on it. Now we come back to our moving average. You should expect some kind of reaction. It may fail to take out our swing high, but I don't know what this goes. 4 ticks, or about 4 ticks here. Now we gear up and we start. We challenge a swing low down here. We see our push down, our next push down, and now they start getting lengthy. And you just have to ride this kind of thing out. When price is just consolidated, just ride it out. Let yourself let the breakout happen. We're not breakout traders, so we wait for our retraces and then start taking advantage of those moves. This is all just stuff I marked up in the room, so I was telling the members about whatever at that point. So here we get some shorts. This isn't really specifically my favorite kind of short, a little bit far away from the bands. And if you think about it, you could say, okay, well, this is a fib level and maybe a 50% up here, and then you start getting into the people say, oh, it's actually from this level. If you draw the wrong one, you're wrong and you don't get the entry, but at least Sniper will allow you to. So we have a number of shorts playing out in here. And then we have our final signal here, and we are not seeing our green cross below that dotted magenta. It's not a confirmed signal for us. Then price, like a balloon, starts going up, and so now you can see that we have longs playing out, and unfortunately don't get a signal in here, but you can see how many signals you do get. The DAX is ridiculous. DAX, just acres of signals all day long, long, shorts. It's going to give you plenty of opportunity. If you take these 3 trades right here, you'll do fine. And it's going to give you many opportunities in a given day. I can scroll for a long time, and it's not even going to bring us to, the UK market open. So if it's not a market that you've traded, at least watch it. It's the signals that it gives are, it's not very tricky. I would say Russell can be tricky as far as it likes to do the double retraces. So if you just take advantage of divergences on those signals, you'll definitely do okay. I like to, that's exactly the way I like to trade the Russell is using the divergences. So let me drag this over real fast. I'm not sure if I'm missing any questions, so let me see. There's a big arrow. Okay, the little triangle, that's our confirmation. It basically generates when our targeter is the green lines crossing that flat plum colored line. That's what generates this. So if you're not going to go below your midline, the trade's not going to go anywhere. And I'm always looking for the targeter cross as well. Here is some CL action from today, and this is a short. And we get some upside divergence. It pushes us back to our moving average. We have our next short. Runs into this little double bottom up here, target across, pushes us back down, and now we're failing to take out the swing low. So at that point, you have to consider that we're gearing up for a trend change. And then you start putting in your longs. Now you're going to get a lot of signals to the upside. So let's check this out. This is like 714 area on CL. Okay. All right. So this is where our signal would start looking for longs. And because of the depth of the retrace, on the 6 range, it kept us into short side territory, like we're seeing here and here and here. But on our 3, the signal is looking for longs. So that's when you want it to be aware. Here's our next short on the 6. And so we talk about that in the room all the time, so that the market doesn't surprise us when, and it basically is going to happen when you start looking for a trend change on the 3. The 6 range will tell you the story. All right, let me swap these charts around. I've been rattling on. I'll try to get caught up with chat here. Please let me know if anybody has any specific questions. Okay, Aaron says, I am use candle charts. How does this work? Aaron, I'm not exactly sure what you mean. You can use these signals on a different candle type of chart. My preference is, because I'm always looking for very small stops, my preference is not to go with, say, minute charts or anything where you're going to get that varying candle length. I'm okay with the candle length that a Heikin-Ashi chart offers, because it's not horrendously different, but you can see some of the candles, like whatever around news time, can be very long. And as far as that tight little reversal pattern that we're trying to take advantage of, it is definitely will skew that and make our stop have to be too big or what have you. So I'm always looking for that tight little reversal pattern to play out, and then just put some logic behind it. All right, Eric is saying, can you say when the signal appears a bar or two? Can I say? Well, what ends up happening is when we get our signals, they're going to start looking for that reversal pattern, and then as price wants to, say we're looking at whatever shorts, when price continues to retrace, it will adjust, because we're looking for the reversal, and until that locks in, the signal wants to stay fluid so that we can always get a better entry price. So when we're looking at, I don't know, say this, it may start showing us a short side signal, and as price retraces, we're basically able to squeeze price against our reaction points, and you can do it on your dome too. And you can, if the initial price is, I don't know, down here, we wouldn't be interested, but just say for grins, we can start dragging our price up on our dome, and price cannot continue the trend without going through us. So that's part of what the signal's looking at. How many contracts? George, you can start with one, certainly. There's people that trade one, and we have members that trade 80. So, or one member that trades 80 contracts, but he does not have the biggest target in the world. Now, and just discussing, number of contracts. I've known many traders that trade the bigger numbers, 20, 35, 80, what have you, and they are hitting very small targets a day, and that is effective for them. And so, the one that trades 80 contracts, he takes off half his position at 2 ticks. He takes off a quarter of it at 2 more ticks, and then basically 6 ticks is his target. And he, with that number, you do have to trade ES usually. It can handle the volume. EMD would not. So EMD is usually somewhere around a volume of around 8,000, and then of course ES is hundreds and hundreds of thousands every day. Jay, does your software levels? No, it does not, Jay. That was me also. Hey, Rob, you're a kindred spirit. Fibs can make you feel like fools. Breakout can make you feel like a fool also. At least on fibs, you're looking for a retrace, but you get run over and you get left behind. You get left at the altar. But yes, as far as that goes, Sniper, a big part of it was trying to identify exactly where the market's retracing to. And you can certainly look at everything that I've got, and you can bend over backwards and try to identify the same levels and the reversal pattern, but it's a headache. And so I keep my room cheap, and we have a good time in it, and my members are the greatest for sure. Sorry, family. Okay, sorry, Ron. I hope everybody's okay. Trader T, which chart is better for the system 3 range or Renko? I'm definitely the type to work with a range chart. The Renko is just kind of sharp, and it's not really visually. It's not what I'm used to looking at. Although if it was all I had to trade off of, you could make that work for sure. What are the bands? The bands just they are about they're 10% off of above and below our moving average, and it's a very good retrace point. You don't need to have them on your chart, but sometimes the market will come up and test your moving average or right in the middle, and so I find them pretty valuable. Is 2 consecutive loss trade setups very common or frequent? Trader T, that's why when I'm trading, I'm only looking for when we get into a trend. I'm also always eyeballing the 6 range chart, and so I don't, as long as you're taking advantage of all the information available to you, I don't think that you're going to have many losers in a row. I'll say that anyway. It's a very high probability signal, and if you just visually say, okay, identify when we're in a trend, when we're not, I think that you'll do very well with it. Does Signals have alarms or alerts? Yes, there are audio alerts, Jen, and we have those available in the forum. And okay. Will it work on minute charts the same? Yeah, James, I was probably late in talking about that, or seeing your message actually. The minute charts, it can skew your charts because of just reactions to whatever is going on in the market, and so it's it's not my favorite. I like to have a fairly standardized candle length. What about a 5-minute chart? Same story, Ali, Rob, what are the bands? Okay, we covered that. TF charts, minute charts, okay. The bands are MA envelope. Yes, Edward, yes, they are. And 5-minute chart, please. All right, well, everybody wants to see the minute charts. Okay, I will need to connect very quickly on that. I know I'm out of time. John, yell at me if I need to wrap things up. I'm having to connect. Okay, well, having a little bit of issue. Show Renko bars. Okay, I can show it in the slide. Okay, what's length of the free trial? The free trial is 3 days per month, and it's usually going to be a Monday, Tuesday, Wednesday. This time of year, I am working around the holidays, so it's usually like the 3rd week of the month. But I had to move things up this month, so I ran the free trial last week. If you need access to the room, if you need to see these things running along, humming along, definitely just drop me an email and I'll let you in for the day. Not a big deal. We don't really discuss anything that I haven't discussed here. When you're in the free trial, it's no different than the room. The indicator costs every month $99, including the trading room. Yes, Heinz, it's $199 for the initial month. Everybody can have 10% off. Just let me know you attended the webinar, so we'll knock it down by 20 bucks, and then after that, it's 99 bucks a month. Free trial is 30 days. It's 3 days every month, so it's just basically room access and watch them work. I've given the indicators out, and it's kind of a hassle to put the people in the system and get their machine IDs and this and that, and so I really attempt not to send out the indicators because it's a big learning curve and all of that. Today, okay, I guess Edward's answering that. There's a free trial. It's just room access, but you're basically watching the same things that you would on your own charts, Paul. How many signals? Okay, well, there's 1,000 signals, and I don't count them up, Trader T. Of those that we can identify what's going on in the market, I would say the bulk of everything you're going to see is going to do just fine. But is it going to go 50 ticks or is it going to go 6? That's going to be up to the market. How many candles bars does it take for the turn? Well, we're watching the targeter as far as having it be on the. Okay, just reading John's comments to me. As far as the cross goes, you can definitely have it set up to not be on the bar close, and it's going to show you the hook. But primarily what we're going to be seeing is if the dotted line and the green line are nowhere close to crossing, then we know we're not going to get the cross just yet. When they start nearing each other, you can pretty much identify what's going to be going on very easily. But if they're not even close to crossing, then then just pass on the signal. Look at a different market. Come back to that trade. People think that CL is just such a fast market, and there are times when it'll print 20 candles in 3 seconds. That will happen, but it's not the norm. Generally we can just watch CL, and it's very identifiable what's going on with it. Russell and EMD, same story. They're fairly slow. The DAX, I like it because it's it's a quick turnaround. The trades are usually very fast, and as long as you're identifying known reversal points, your support and resistance areas, the divergences that you're looking for, all of this kind of stuff, to go along with your signal. You get your little double tops and all this fun stuff. You can hit these trades, left and right. There's a lot of opportunity. Or if you want to trade slower, then just check it out on a 6 range and identify those. Longer time frame impossible. You trade the news. Canoe, I primarily try to stay out at least for a minute after news. There can just be that initial whipsaw. Like today's news, it was mixed. We had all kinds of numbers coming out, and at 8:30, and some was good, some was bad. So what direction are you going to take? Now, CL, when we were talking about that news, the crude oil inventory numbers came out, and it was much worse than expected. So you're going to be looking for longs in that case, just because less oil price shoots up, but everybody else was sinking at that point. So crude was not giving me exactly what I wanted, just because it was bucking the trend. Everything that we have generally will trade in the same direction, but Euro will do it a little sluggishly. DAX will do it very haltingly. It will show you great trades, and then it'll start retracing and showing some longs, and then I'm just like, just stay out of it. Everybody else was showing us nice downside, predictable moves. Wooter news is not true. Yep, thank you, and happy thanks. And any success rate? I think that they're very successful. Most of my students have been with me for a long time. The indicator costs every month. Heinz, yes, it's $99 a month for the indicator package and the room subscription. Stop loss for this method, it's always going to be the tip of our arrow. So sometimes that can be 6 ticks, sometimes it can be 8 ticks. It's just going to depend on the length of your Heiken Escher candles. Yes, trading room is included. If we saw, do we get to keep the indicators and use the indicators? It is part of being of subscribing to the room is the indicator package. So the indicators work as long as you're a current member. Does the arrow come real time, or is there a delay? The arrow will actually come in real time, and it will candle by candle retrace as price retraces, and it will lock in once our reversal pattern locks in. No, you lose the indicators. They're at least only, yes, real-time arrows, yes. Could you show the ES from 9:30? Okay. All right. This is a couple of days ago, I guess. We had good movement on ES. It is the most sluggish market that we trade. Let's see. This is the downside push that we saw after 11, but it was same story. 8 o'clock, nice trend after the market open. A lot of false reversal stuff. We're testing these lows, but showing higher divergences to the long side. So it wasn't showing anything very exciting until it starts really selling off later. Asian market, all of that kind of fun stuff. So they had an easier go of it. Here's today after leading up to our 10 o'clock news. Well, we had 9:55 news today, so we got a few good entries out of that, and then some lackluster movement after lunch. And okay, do we get okay during the free trial? No, the indicators, you just watch them. Okay, Heinz, I think you're all answered, and the bands we talked about. Yes, it will work with Renko bars. Big B, sorry. In the slideshow, I was showing the 4 Renko bars, but I don't have them up handy right now. Let's see how you have 2. Okay, sorry, I'm rushing. The right 2 charts, I have the diver signals on. Everything else that you see is a sniper signal. Yes, Lance, I give you the charts. They're available in the forum. And then the candles I help you out with also. And then, okay. Jay, no, I'm not. That's not part of what the signals. Broker would be happy. We're not looking to take everything, Joy. That's for sure. Of course, you can add any other indicators. People send me their charts, and they have all kinds of indicators layered on them. You can call the signals I have in the room. I don't have a call room. Everybody get into this trade now. But as the signals develop, we identify them. We say, what we'd pass on, what the market's showing us, and then we say, oh, okay, here's a nice divergent signal on the DAX. Here's this, here's that. And so, if you're in the room, you'll see that there are signals happening, consistently. and you know, you can miss 9/10 of them and still do fine. Okay, Heinz, diver signal on one chart and sniper on the rest. Yes, it can on tick charts, Richard, but it's probably, you know, I look at tick charts on gold and that kind of thing, and it's really kind of, it flattens out the signals. So it's not, I look at tick and volume charts with it, and it's, you know, it just doesn't look as spectacular, but it's really going to just depend on the instrument. Edward, sign you up. It would be a pleasure to have you aboard, Edward. Definitely. Okay. Thank you, James T. Appreciate it. And post a website link. Yep. All right. Thank you for that, Edward. And okay. I'm getting booted. Thanks, Rob. Okay. Thank you, Avjit. It's nice to see you. Rob, are the trades called out when they are made? As I trade on my own. Everybody in the room trades on their own, but we talk about the signals as they're made available. Great. Thank you, Joy. Really appreciate it. And it is open from 8 a.m. to 11:30. And CJ, just let me know, you know, when you sign up, just say I was in the webinar. Okay, I do need to wrap it up. I'm real sorry. Okay, so yep, wrap it up, John. Thank you, everyone. And Shahab, you're awesome. Good to see you. And thank you, Yellow. Sorry, guys, it got to be kind of an auction at the end there. All right, thank you, Edward. Appreciate it. It's all yours, John. And thanks for being patient, Kyle.
I'd like to give a special thank you to Rob Graham of EminiSniper. Thank you so much for presenting here in our NinjaTrader webinar room today. And thank you for all the great questions for everybody who attended. I know there were a lot of questions there at the end. If you have any further questions, feel free to send them over to Rob. Visit his website at EminiSniper.com. I'll be happy to have you join that free trial and join you in his room. Everybody, I hope you have a wonderful holiday weekend. We do have a charting, or excuse me, an ATM level 1 webinar, I believe, here for you. For Kyle, my colleague here, is ready to present that into the room, so definitely stick around if you want to learn more about that advanced trade management. And here's a link to more of those free training events as well. Again, hope you have a wonderful holiday weekend and happy trading from everybody here at NinjaTrader.